Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, August 30th, 2007. The markets are closed, and we had kind of a mixed day here today. S&P 500 closed with a loss of 46 cents, about 0.31%. You can still see that it remains below the declining 50-day moving average, and that we've got this potential for the inverted head and shoulders pattern setting up, but it's going to need to clear 148.33. In other words, it's going to need to make a higher high before we can start to think that this market has a chance of turning around. We do still see that declining 50-day moving average, so that still casts a shadow of doubt on the market if it does get above there. But if you look back at the blog post I put yesterday with the charts from 2005 and 2006, they were very similar, and they had declining 50-day moving averages. So it's something to be aware of. The markets do continue to remain tricky in here, so it's going to continue to favor shorter-term trades. I don't want you to think that based on that pattern that I had outlined that I'm bullish all of a sudden, because I'm not. We're still in this indecisive period. If you look at today's action in the S&P 500, it started out pretty good. The market remained above that daily VWAP, cut down through it. Looked like it was going to trap some people underneath it as it recovered quickly. But at the end of the day, the selling pressure came back in, and the market closed below the VWAP, meaning that the average price traded higher than where the close was. So most people who participated in the market today were in fact underwater in their positions. If you look at the 3-day VWAP though, and we're looking at the 3-day because that's basically since that gap down, the 3-day VWAP, we do remain above that level. So a lot of mixed messages in this market. Looking at the 10-minute time frame, we had seen this market break down below the what I viewed as the most valid trend line on the intraday time frame, which was right here, and we'd seen that break on Tuesday rather. It looked like the end of the world, but I pointed out the possibility of a potential turnaround. We did get that turnaround, and now it looks like we don't have confirmation yet that the buyers are in control. I think that today's range, basically trading above 147.25 or below 145, is going to be very important tomorrow, although I won't be trading. So that's something to be aware of. It looks like we're in this little neutral range, and a lot of people are looking for the Federal Reserve Chairman to say something that, again, might ignite the buying frenzy. We'll see. I think that when you have a news-driven market like that, sidelines is a lot of times the best place to be. So I think that short-term, it's neutral. Intermediate to longer term, kind of intermediate term neutral with a chance to move higher. If the market doesn't move higher, basically above this inverted head and shoulders pattern sometime over the next 2 weeks, I think we could be in for a lot more trouble. But there's still just a lot of mixed signs. It's not clear, so you've got to remain very defensive and keep your trades shorter term. The semiconductors, SMH, yesterday had said I'd like to see a pullback towards that 5-day moving average and then a rally. We did get that, but the market didn't hold on to those gains. So again, it was the daily VWAP that once that had definitively broken late in the afternoon here, that's where the sellers came in. So for today, the sellers were in control of the semiconductors, even though they finished with a gain of 5 cents. They finished with a gain of 5 cents, but the average transaction was up at about $37.56. So here it is at $37.40. The average purchase was at 16 cents higher. So that puts makes the market a little weak just from a one-day standpoint. The 3-day VWAP you can see right here. So the 10-minute time frame, like I said yesterday, I'd like to see it continue to hold above 37.30. And even give it a little bit of room down towards that $37 level that had been so important back towards the about 2 weeks ago. So still mixed signals here as well. A lot of mixed signals all over the place. The IWM Russell 2000, it does still have a downward tilt to it. We've got the declining 5-day moving average on the 10-minute time frame, but we've got these moving averages crisscrossing, and I think that basically taking out about 79.25 will probably lead to a test of that 80-10, 80-20 level that we've been looking at as the resistance in here. But you look at this daily picture, it looks ugly. It really doesn't look very good. It's a little bit easy to get encouraged from the intraday action, but when you back it up to that daily time frame, it still looks like a big mess here, so a lot of risk. Now the one market that I thought was looking the best, and the one that actually broke this neckline is the NASDAQ 100. You can see that here's the left shoulder, the right, the head, and then the right shoulder. And what I did today was, on my blog, I posted another chart that kind of redefined what I thought the upward target was. I didn't take the absolute low here. Instead, I took basically that 200-day moving average at about 45.5. Went straight up to the neckline at about 48.5. So that's about 3 points. Add that to the breakout point at 48. That gives us an upward objective of about $51 a share. And I redefine that because I just want to, I think that, you know, we've got to be more conservative in this market. You can't get carried away with these price targets and measure to these extreme levels. So measuring price levels anyways is a very imperfect science. And again, it's not even a science at all. It's an art like technical analysis is. But it does give us an idea where the market potentially could go. It is very encouraging to me that the market did break this neckline and hold above it, and also held above that 50-day moving average. So we've got the 10-day about to cross up to the 20-day moving average. That would be good. So maybe a little bit more backing and filling along this neckline for a couple days, and then we can perhaps move higher. I think that would be a bullish scenario. On the 10-minute time frame, you can see that we got an initial pullback. That, you know, I was kind of hoping that that would happen because we got extended late in the day yesterday. Let's take a look at a 2-minute time frame. We got extended late in the day yesterday. We got that pullback, and then it was. Why isn't my chart updating it? Let's take a redo that. Here we can see it took off from there, but it broke down through support later in the day. And in this afternoon, I had mentioned on the blog right around this area that it looked like the market was starting to weaken. We had an advanced decline line that was negative all day. It finished 13 to 19, meaning 1,300 stocks up, 1,900 stocks down. That's showing that more stocks were down during the course of the day than were up. That had me a little suspicious. The S&P was down for most of the day. That had me suspicious, and I said you want to be very defensive in here and lock in profits. That basically, if 48.40 was taken out, that we could see a little bit more selling pressure. And you can see that was a pretty widely watched level. The market did recover late in the day and came very close to closing at that average price. So again, it's just a very mixed picture in here, and you've got to continue to go slow.